Good afternoon. Happy Thursday. This is Black Angels How and Why You Should Invest. So, if you just got all fired up by my good friend Qasim's speech, then you should be here and you should be ready to jump in and change the narrative. So, first things first, I always like to introduce myself because it's necessary to know why the heck you should care about what I'm talking about. I never like taking advice from people that I don't know. So, I'm Dr. Shante, and I am an angel investor. I'm a private investor. I'm the CEO of Black Pearl Global Investments. I'm also a partner in Equilibrium Impact Ventures, which is doing all of that wonderful work that Qasim's talking about. But before I got pulled into the VC space, I got my start specifically as an angel investor. I'm also the author of a couple of books. One is called Black Angels, Black Angels Among Us. And I'm going to start this conversation not with investing, but I'm going to talk about something that we never really talk about out loud, and that's gentrification, but why gentrification is our problem. And not our problem in that people are coming into our neighborhoods. It's actually the opposite problem. It's a problem we created. So I don't know if you guys are like me. I grew up in a lower income neighborhood. And as soon as my parents got money, where did they go? To the burbs. And, they got the heck out of Dodge really quickly. And that was the dream, right? As soon as we get some money, we're going somewhere else. We're not going to invest in our community. We're going to leave it. And what happens in a vacuum? Other people come in. So I like to always start angel investing conversations by saying, people cannot gentrify your neighborhood if you don't give them space to move into it. And that's where angel investing really comes into play here. So stay with me and stick with this topic just a little bit because it hurts a little bit at first, but I promise you'll agree with me in the end. So when we think about our neighborhoods, and a lot of people say, well, why would I want to stay in a place where there's no value? I can promise you as an investor, no one puts money into a space where there's no value. No one comes in and buys property in a space where there's no value. No one comes into an area and says, you know what, I'm just going to sink a bunch of money here because there's no value. No, we've got to, first of all, retune our minds. And when we think about angel investing, that's what we're able to do, is really retool our minds and how we look at and assess value. Now, one of the myths that Qasim talked about in his speech was powerlessness. I personally believe that angel investing actually gives us the power back to talk about some of those things that we don't get to talk about, or the conversations we don't get to join in, like VC, right? If we're angel investors, then we are the deployers of the capital. If we're talking about gentrification, we're the people that own the properties. If we're talking about education or politics, we can change the conversation by becoming angel investors. So powerlessness is something that we are not because we all have checks. Two things that our community has in spades. One is talent. The other is a sense of community. And I have the pleasure of talking to startups and founders all over the world all the time. And inherent in our startups is this impact notion. It's this community notion. I've never actually met a founder of color who wasn't building something that would have an impact on their community. And I think that's a powerful thing. And I think the way that we can actually support them is by angel investing. So I told you that we aren't powerless, but why aren't we powerless? Well, it's because angel investing actually doesn't take as much as you might think when compared to venture capital. So I'll start with some data. So only 1.3% of all angel investors are Black. That's actually less than the 3% that's actually in venture capital. Now, why does that matter? Where do angels come in? Angels come in very, very, very early on in the life cycle of a business or a startup. And angel money, if it's patient and if it is sufficient, it's able to help a company, a founder, a startup get through what some people call the valley of death, but it helps them to get that early traction. It also helps them to fend off all of the vultures. Now, one of the things that I see time and time again with startups and small businesses. So I'm going to talk about two different groups here: startups, high growth, high tech kind of things that might go after venture capital. But I'm also going to talk about community or Main Street businesses that are, those anchors in our communities. Both of them need money. Okay, so if we are able to support those businesses early on, guess what they don't have to take? Predatory money. And why would they be preyed to money? If they're smart enough, right? If they're good business owners, they won't need that. Well, statistics show that Black business owners or people of color are less likely to actually get a business bank loan. And if they do get the loan, they're going to get less than they asked for. So commercial lending probably, or small business banking, really isn't going to be something that's available to them. Especially if it's heavily reliant on credit. And if you're an entrepreneur, like I was an entrepreneur, your credit might be shot to shingles for at least a little while. So that's not going to be an option for them. That puts them into the secondary market. If they have to go to the secondary market, that cost of capital is extremely high. I'll give you a first example of a company that I had the pleasure of working with. And this company was able to get started. They started generating money. They got to generating about $1 million, and they needed somewhere around $250,000 in order to get to the next level. That $250,000 they could not get from their bank. They were over leveraged. That $250,000, they didn't know any angels. They didn't know any private investors. So they found someone who would give them $250,000. They wrote them that check. And then what happened? They started making payments. Now, they didn't read the fine print on this particular loan. And after 5 years, they still owed $250,000, even though they paid more than $1 million. Why? Because they had to go to the secondary market, and the loan that they had to take out from this private investor only paid off the interest, and they would have to pay the interest plus the principal, and all of this unpaid principal had compounding interest on top of it. So they were just in a mountain of debt. So they came to my firm and they said, can you help us get out of this? And of course, we worked very hard to get them out of that capital situation. That happens time and time and time again. So that's part of the why. We shouldn't be sending our businesses to this secondary market. We should not allow them to be prey. The other why that I think is much more important is, if we want to control the conversations, we've got to control the currency. And that is the bottom line for all of what we're talking about throughout this entire conference. Controlling the conversation, meaning if we want to see more impactful startups make it, we've got to put the money towards it. If we want to see more founders of color moving forward, we've got to put the money behind them. Well, Dr. Shante, I'm not a millionaire, right? So you're not a millionaire. I wasn't a millionaire when I made my first investment. My first investment actually came in the form of something that wasn't super sexy. It wasn't super high tech. It was something I knew. It was hair, right? It was my hair salon. So I came in thinking, okay, I love my hairstylist. I love those products that she's putting forth. And why not? Why is she not selling these products? Because I can't find the products she uses in my hair. So I asked her a very, very simple question. And I said to her, well, I want to buy your products and, keep me coming back, and generate other revenue for you. Why aren't you selling them? And she simply said, I don't have enough capital in order to buy the products and then use them on the client. So what I buy, I have to use. I don't have a surplus to sell. So my very first angel investment was to a Main Street business. I wrote her $1,000 check, $1,000. And that $1,000 helped her to buy products. Those products went on the shelf. The products on that shelf sold very, very quickly. She re-upped time and time again. After about 1.5 years, she had more than returned the loan or the investment plus margin. And she said, well, can we do this a couple more times? Can we increase this investment? Of course we can. I'm an investor. I want to make money on my investment. And she saw this as a method to generate extra revenue into her firm, into her business, but she saw it as a leg up. So she ended up not only just having an extra revenue stream, she hired 2 employees. That's 2 other incomes that's going into our community, creating economic mobility. On top of that, she said, you know what? This is really working well. I wonder if we can open a second salon. So she opened a second salon. And from that, we're now more than 10 years beyond that first investment. And that first investment has actually helped her to move completely from behind the chair. And she now is a national director for a hair startup that is growing by leaps and bounds. Now, why is that story significant to you other than, it's a great story about how you can take a little money? It's significant because it shows the power of community. Our community has a lot of talent. It does not necessarily have a lot of capital currently, but collectively we can pool our monies together. So we talked about angel investing just a little bit, and we'll talk about angel investing in the terms of what can we do with our little dollars? How do I get started? I encourage everybody to do what I call a financial fast. Your financial fast is literally saying, where does all my money go? And yes, I am talking to myself a lot of times and saying, my money needs to go, to bills. And then I've got, frivolous things that I spend money on, but I need to know where my money's going. That's how you start to see whether or not you have any extra capital to put anywhere. Make sure you have your savings, and then you go from there. But when you start looking at how much you might want to, start investing, I want to have $1,000. Maybe $1,000 isn't enough for what you want to do or the types of businesses you want to invest in. You might also have 10 friends that have $1,000. I worked with a small group of women who came together after seeing a couple of workshops that I had done. And they said, you know what, I've got $1,000 and I've got $1,000. And soon they had $10,000. And this group of Black women said, together, we're going to come together to invest in a Black woman-owned startup. So they provided early capital into a Black woman-owned business in order to help that business grow. That's the power of community. None of them took an exorbitant amount of risk. None of them, are out there speculating, and none of them actually had the expectation of walking away becoming a multi-billionaire on their $1,000 investment, but they got their feet wet. See, I've got a question in the chat here. It says, what's the difference between giving money and investing? Oh, well, there's a huge difference. If you give your money away, that's philanthropy. Philanthropy means you're giving it and you don't expect to make any money on it. You are putting it out there to do good, and that's great, but you are not respecting any type of financial return. The type of return you might get is, societal good, impact related. It might even be feel good to you, but it absolutely is not going to be financially returned back to you. So that's giving money away, or philanthropy. Investing your money means that you are putting your money into something with the expectation that it's going to return your principal plus something else. And the principal is the amount of money by which you put into the investment in the first place. Now, on that note, there are lots of types of investments. You can make an investment that looks like debt, which means that, I lent somebody some money and they made a payment to me over time. And when I add all those payments back up together, I got my money back plus some margin on top of that. That's an investment that has a return, but that's a classic debt vehicle. Now that's going to look like the typical loans that we already know how to do. If we're talking about investment more aligned with startups or small businesses, then you may be putting that money in and waiting for a period of time. It could be 6 months, it could be 12 months, it could be 3 years, depending on the type of business you're investing in. But you have put your money in there, you're waiting a period of time, and you're expecting a return to come back to you. And that return, if you are going to be a VC investor, is going to be completely outsized. If you're an angel investor and you're very early in and you're investing in something that's going to be a high growth business, then you're going to be expecting a really, you're early in, you may be expecting quite a big return. You probably won't get rich as an angel investor unless you have done it lots and lots and lots of times. You're pretty diversified and you've been able to invest larger sums of money. So if you are investing $1,000, I don't want you to walk away thinking, Dr. Shante told me I invested $1,000 and I'm going to make $1 million next year. That's not likely to happen. A couple of other points that I do want to pull out while we're talking about angel investing. We talked about a little bit of the how. I started with understanding what you're working with as far as capital goes. Okay, you might say, okay, I've done my financial fast. I know where my money's going, and I've got a little extra money. Let's say, all in all, after doing this assessment, I've got $2,000 a month that I could pull to the side. What do you do with that $2,000? Now, you could, go out and find some business to put that $2,000 in, but most people are probably going to do something a bit different. They may go to the internet, and they may go to a crowd equity fund or a crowd investing platform that's going to allow them to take a small equity stake in a company, similar to how I described my first investment. But this is a company that could be a high growth business. It could be some business that's, across the country. It could be across the world. Crowd equity allows you to put small amounts of money into businesses, and it grows over time. The beauty of crowdfunding or crowd equity is you don't have to worry about necessarily being an accredited investor, which is a barrier that keeps a lot of smaller investors and people of color out, because it means that you have at least $1 million of net worth, or you are a high earner. And a lot of people haven't gotten to that level yet, and that keeps them out of those high growth opportunities. So you want to absolutely look at some of these opportunities in a couple of ways. Think about your risk tolerance. You want to think, am I someone who really loves things that are highly speculative, and I'm all in on things that are super, super new, and I'm willing to take a chance? Or am I someone who might be more conservative? I want to invest, but I want to invest in something I know. I've made investments into things like a catering company on one of the platforms. I see a couple of places that you can go. Cosm has dropped them in. WeFunder, Republic. I like Mainvest. Mainvest is actually a crowd equity platform that allows you to invest in Main Street businesses. I will also give you a couple of pointers on crowdfunding. There are several types of crowdfunding. So don't confuse crowd equity platforms with those crowdfund platforms that are going to give you like t-shirts. Those are excellent ways to get capital into businesses, but you are not expecting a return there. You're not expecting a financial return. You are, putting monies in, you are helping them get started, but you absolutely aren't going to see any type of financials, anything down the line. So if you get onto a platform and, someone has a great idea and they say, oh, this level gives you, a t-shirt and then that's a different type of crowdfunding model. It is not necessarily investing. It's akin, someone said giving away money. I don't know that it's giving away money. It's an investment that doesn't have a financial return that's tied to it. A few other things that I'd like us to really consider as we think about our currency, our capital, our communities. I want us to really start to think about the missions and the things that we hold dear. We talk about holding the boundaries and holding our values in our community, and our capital determines that. Where we spend our money, how we spend our money, what we invest in absolutely determines that. There was a headline about a couple of weeks ago that said, Black spending power hit an all-time high. However, our net worth declined. That means we spent money, but we didn't actually grow our base. And that is a troubling sign. It's a troubling sign because that means that we may be spending on things that aren't retaining their value. Angel investing is a mechanism by which we can retain more of our net worth. That means we might become angel investors by collectively owning property. We could become angel investors by investing in businesses. We could become angel investors by supporting a specific startup, or we may even find a specific fund that allows for smaller checks from individuals, where we can write a check into a venture fund as an individual and be an investor in that way. I will say all of that to say, there's a phrase that I've just fallen in love with. Our mission should not be divorced from economic value. At the end of the day, we have to make sure that if we want to change all of these statistics that we see, Black businesses underfunded, people of color getting overlooked, the amount of funding from VC not staying stagnant, not going up. We have lots and lots of new fund managers of color. However, it's taking them twice as long to raise the capital, and they are raising a fund that's about half the size of their counterparts, which means we can't rely on the venture capital space exclusively to push things forward. We really need to think about how we as individuals are going to take charge of this conversation. And the way we do that, in my opinion, is by getting off the sidelines and becoming investors, writing checks directly into our communities. My advice to anyone who is even the least bit curious about angel investing or starting to write checks within their community really is to come into the conversation and start looking at the local businesses around you. You might ask, well, how do I find a business in my community that I might want to invest in? Well, think about the businesses that you frequent a lot. I tell people, we always have that favorite spot that we complain about, right? Like, oh, I want to go there, but it takes so long to get food, or oh, I want to go there, but they never have the stuff I want. That might be an opportunity. We have to stop looking at those inconveniences as barriers for us to support and say, okay, maybe my support needs to look like an investment in. Now, please remember, taking on an angel investment into your personal finances, you need a lawyer. You do need to have an attorney. You do need to have, you need to understand the implications for your finances. So please talk to an accountant. It's not a DIY situation unless you're going to go with an established platform, and then they're going to generate those tax forms for you. If you're going to source your own deals or go out and find businesses for you to invest in, make sure you have a team. If you don't have a team, it's okay, but you do need to ask questions. You need to ask a lot of questions. You don't want to write yourself or paint yourself into a corner. You don't want to lose your money. On that note, setting expectations is the last thing that I'll say here. Angel investing is an excellent way to support our community. It's an excellent way in order to get more businesses, getting that early traction, some customer discovery, that prototyping, just giving them what I like to call financial faith, showing them that there is community support. Angel investing is not charity, so you're going to need to choose good opportunities. You're not just giving it to anyone that you happen to like. It needs to have some actual economic viability and some business viability. But you want to make sure that early on you're saying, okay, good opportunity, plus I'm well prepared to wait, because you can't put pressure on an early business. You don't want to say, okay, I'm going to give you this money and in 60 days I need my money back. That's not how angel investing works. If you're an angel, you probably need to be what we would call patient capital. And patient capital is really that type of capital that's going to wait it out. It's going to be there for the long haul. It's going to be there over time and saying, okay, I'm here with you, growing and growing and growing. And hopefully you see an exit or a return on your funds at some point. I will say my earliest true investment that was equity specific was a 5-year wait. So rule of thumb, expect to wait. Expect it to be a slow jog for most investments, and then don't expect, a 1,000-fold return, depending on how much money you put in. The return could be nice. It may not be life-changing, but I like to think of angel investments as me doing my part to push businesses forward. See a couple of other questions here. With crowdfunding with equity, does the group have voting rights? I will say, for the most part, I don't think so. The few platforms that I have been on, there is not a voting right. Now, that might be dependent upon how much you put into the opportunity. I haven't seen that. Usually, what I've seen is, you can invest as little as $50 all the way up to, $10,000 or $50,000. And depending on the investment level, there may be additional rights granted at a specific level. So it may vary depending on what type of platform and the opportunity as it's laid out. Does giving or investing always need to be with the intent of getting a return? No. Investing, in my opinion, is about return. The type of return you're looking for could be balanced. There are lots of social investors or social impact investors that are looking to balance impact, meaning I'm doing societal good, or I'm doing, or I'm, growing, food, or I'm solving a problem, or I'm achieving a mission, or decreasing inequity. Plus, I might make a return, and sometimes that social return might be more than the financial return. Sometimes the financial return might be greater than the social return. It doesn't have to be financial. I would encourage you, though, to look at your investments as some balance of both. And it may be a pendulum. It could be, 60-40 on one side, 70-30 on the other. This is a personal decision for me. I like to be charitable where I want to be charitable. And if I'm going to give away money, that's philanthropy. I don't call that investing at all. I do plan to do good. I know there is a return, but if I want pure social return or pure feel good, or, get all the good feels, that's going to be in a completely separate bucket. I don't consider that a part of my angel investing activities, because that's not going to increase my bottom line. And because I'm an investor and that's how I make my money, I do invest with the intent on getting a return. So I would encourage us all to have a balance between impact and financial return. I, for one, don't think you have to sacrifice one for the other. I think you can do good and you can make money. I don't think you have to say, okay, well, I put in a lot of money, so I will just expect, I'll take any collateral harm that comes. I don't think that has to be the case, just like I don't think if you're going to do good, you don't have to get it, you won't get any monies back. So, think about, as you go forward and you decide to get off the investing line, not the charity line, getting off the sidelines and getting into the game and investing, think about it with some intention of activating your money, because activated money compounds. Activating money creates opportunities. Activated money is able to create economic mobility. Activated money is able to push the community forward. It's able to change the narrative. Activated money can change the world. And I love just the metaphor of angels, and angels are here to save the day. And I encourage all of us brown people, all of us Black people, to become the angels of our communities and lift those businesses up. I don't know if we have time for one more question. I think we're good to go here. Oh, I've got 5 more minutes. Well, any parting thoughts? I would just say to you, my imperative to especially my Black women investors, I've adopted what I call, I'm the Black lady that invests. While we see very small numbers of Black people in the angel investing space, we see even fewer women, and women seem to be very reticent to become investors. This is usually because we want to know everything about everything and be completely sure that we aren't missing something, and we want a sure thing. Investing, there are no sure things. That's a big red flag. If you see someone saying, oh, this is a guaranteed return, that's not going to happen. So don't fall for that. But my imperative to women in particular, a lot of women of color end up head of household, or they may end up the breadwinners, because they are getting these degrees and they have these high flying jobs. We need to become check writers. Black women, even at this point, are starting businesses at a very high rate and receiving such tiny amounts of investment, and we really need to move things forward. I say, if we use one of the platforms listed above, will those platforms automatically provide tax forms so we won't need to get an attorney advice on it? I can see that being a barrier. I actually do get tax forms from the opportunities that I have written checks into. So the tax form itself isn't the barrier. However, I will say you need to know what to do with the tax form. So if you're going to start dabbling in the angel investing or investing space writ large, you probably want to start having someone else prepare your taxes. And you want to get advice early on about how to claim income, whether you do that through a separate entity, whether you do that as personal investment. You want to get some CPA guidance on that so that you know what to do with the tax forms that you get. I wouldn't TurboTax it if you're someone who does your own taxes. Hi, Gloria. It's good to see you here. But yes, my passion is Black women. I'm a Black woman investor, and ultimately, all women actually are reticent to jump in. Black women, can really be a catalyst. I hate to use the terminology superwoman because we're not superheroes, but we have had to wear the capes. And I think sometimes it's apt that we save ourselves. So we can put our financial capes on and write checks and save our businesses, save our own businesses, and start writing and investing. And, all of my talk, I hope that you walk away thinking two things. One, you absolutely can do this and you can get started. And then two, you don't have to do it alone. You don't have to invest alone. You don't have to invest by yourself. You absolutely can and should work with a group. Find your tribe. Everybody has an investing tribe, a group of people who absolutely want to do the same things that you do, who are on the same mission, who live in your community, who want to see the same change. So find your investing tribe. I'm happy to help you find your investing tribe at the end of the day. So please feel free to connect with me on any of the social platforms. Anybody who see me speak before knows that I say I'm in these internet streets. So you can find me on Twitter. I'm Dr. Shante. You can find me on LinkedIn. I'm Dr. Shante Williams. You can find me on Instagram. I'm Dr._Shante. I'm on Facebook. I'm literally everywhere. And if you want to ask me a direct question, you can go to my website. It's Dr. spelled out DOCTOR Shante SHANTE.com. And Dr. Shante, if you look up Dr. DOCTOR_SHANTE, you should find me on Facebook. Or if you want to send me a direct email, send it to ask@DrShante.com. So I look forward to connecting with you. Danette, I hope you find me on Facebook, or I will try to look for you. Twitter again, Dr. Shante. They're all the same handle. Should be DOCTOR_Shante on Twitter as well. So I tried to keep it simple because I can't remember many things other than the investing stuff. So Twitter, Instagram, Facebook, all Dr. Shante. My website, drshante.com, all spelled out DOCTOR. And LinkedIn, you will find me, I think, Dr. Shante MBA, if you're looking for me on LinkedIn.